Good morning, it's Monday the 13th of March and welcome to our regular Monday morning roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and then we'll dive into some of the more significant highlights afterwards with, as always, our own thoughts and analysis. So, as always, let's get straight to it. So, the economic numbers being issued this week start on Tuesday with updates on unemployment in the UK and inflation in the US, and we'll be discussing both of these stories in more detail in a moment. Also on Tuesday, the minutes from the Bank of Japan's last meeting are released. On Wednesday, China releases its latest retail sales figures, and that's something that we'll take a look at in more detail in a moment. And the Eurozone releases its latest industrial production numbers, the US its retail sales, and the weekly update on the oil inventories. And Wednesday is Budget Day here in the UK, which unsurprisingly we'll be giving our thoughts on after this. On Thursday, we'll hear the latest unemployment statistics in Australia, the jobless claims and the housing starts and building permits in the US. And Thursday is also interest rate decision day in the Eurozone, and that's again something that we'll give our thoughts on in a moment. And on Friday, we'll get an update on inflation in the Eurozone and the Michigan consumer confidence numbers in the US. And the companies that we'll hear trading updates from this week start today with Direct Line. On Tuesday, we'll hear from TP ICAP and Close Brothers. On Wednesday, US software giant Adobe released their Q4 earnings, and that's something that we'll be giving our thoughts on in a moment. Wednesday also sees results from Eon, Ferrexpo and Prudential. Thursday, it's the turn of BMW, Centamin, Dollar General and Rentokil. And wrapping up Thursday, Deliveroo will be making a delivery of their own with their end-of-year results, and FedEx their third quarter results. Both of those stories we'll be covering towards the end of today's video in more detail. And finally, on Friday, we'll hear from Xpeng. Well, last week saw plenty of volatility, with a very hawkish Fed Chair Powell fueling bets of more aggressive rate hikes from the Fed. And then the collapse of Silicon Valley Bank, raising concerns over the health of the US banking system. This week, the banking sector in the US and Europe will likely remain under the spotlight as investors weigh up capitalization risk across the industry. Here we go again. US inflation data, the ECB rate decision, and of course the UK budget will mean plenty of risk events for investors to focus on. So, as always, let's take a look at this week's bigger stories in more detail. Well, Tuesday sees the release of the latest inflation data from the US. As Federal Reserve Chair Jerome Powell pointed out last week as he testified before Congress, US inflation has been stickier than expected. The January CPI didn't cool as much as expected, falling to 6.4%, down from 6.5%, and core inflation only slipped from 5.7% to 5.6%. In February, inflation is expected to continue its slow grind lower. However, after stronger than expected data across February, the US economy shows no signs of cooling quickly. CPI is expected to ease to 6% year-on-year in February, and core inflation expected to slow to 5.4%. Hotter than expected CPI data could fuel bets that the Fed will raise those rates by 50 basis points in March, of course lifting the US dollar. And Tuesday also sees the release of the latest employment data here in the UK. Well, the UK labour market has remained resilient despite high inflation and negative growth. Even though average earnings have been lagging behind inflation, they are still growing strongly, with pay excluding bonuses jumping 6.7% year-on-year in 3 months to December. That's up from 6% the previous month. Meanwhile, payrolled employees rose 105,000 in January, highlighting the tightness in the UK labour market, which is keeping that wage growth strong. The unemployment level remained at 3.7% in December, but is expected to drop to 3.6% in January. A tight labour market and strong average earnings pound pressure on the Bank of England to continue raising interest rates in March. And Wednesday is the long-anticipated Budget Day here in the UK. Well, after the chaos of Quasi-Kwarteng's autumn statement, the markets will be hoping for a rather less eventful affair. The spring budget will be unveiled by the Treasury Secretary on Wednesday and comes at a time when public finances remain fragile and, of course, the cost of living crisis continues. On the plus side, revenue has proved resilient thanks to higher than expected inflows from self-assessment, which means the government has more wiggle room. The energy cap may rise, although there has been some speculation that it will remain at current levels. And there could also be a tax break for businesses to help offset a planned rise in corporation tax. And we do expect defence spending to rise. And also on Wednesday, China are due to release their latest retail sales data. Well, recent data from China has raised concerns over the strength of the economic recovery as the world's second largest economy recovers from strict COVID restrictions. Retail sales data will shed more light on the health of the consumer as China reopened and after a volatile January. Expectations are for sales to rebound in February by 3.4%, and that was after falling 1.8% in January. That could, of course, help ease last week's worries. The sales figures have the potential for a significant upside surprise, given that the period covers the Chinese New Year period. And finally, on Wednesday, US software giant Adobe are due to release their Q4 earnings. Well, these results come as the share price trades down over 50% since Q4 2021. Demand for Adobe's software continues to grow, but at a much slower pace than in recent years, as customers unsurprisingly rein in their spending. A recent rebound appears to have lost momentum after regulators opposed their acquisition of Figma, a collaborative design platform, for $20 billion. Expectations are for a 9% increase in adjusted profits to earnings per share of $3.68 on an 8% increase in revenue to $4.62 billion. The European Central Bank are due to meet on Thursday and is widely expected to raise interest rates by 50 basis points, taking the benchmark rate to 3.5%. Hawkish-sounding ECB President Christine Lagarde and other ECB policymakers as good as confirmed the move in recent speeches. But of course the big question is what comes next. Well, several ECB policymakers, including Lagarde, have said that further hikes could be necessary after the March meeting. Markets have already started to price in a terminal rate of 4%. With core inflation at a record 5.6% and headline inflation still rising in Spain, France and Germany, the ECB still has plenty of work to do. So as a result, do keep an eye this week on the Euro and the DAX. And also on Thursday, delivery company Deliveroo will be making their own delivery of their full year results. Well, the company's share price has steadied around the 80 pence level after a steep sell-off across the first half of this year. And this price trades well below its 390 pence IPO price, suggesting concerns regarding the company have been priced in. In the Q3 trading update, the company downwardly revised its full-year guidance on sales growth. However, gross transaction value, GTV, rose 8% year-on-year in the UK, outperforming international markets. Margins were revised higher to between -1.2 and -1.5%, as the firm makes headway toward reducing costs by lowering marketing spend. Across the full year, Deliveroo expects GTV of $7 billion across all operations. That's a 7% rise. Adjusted earnings broke even across the second half of the year and are expected to continue improving in the next fiscal year. And finally on Thursday, FedEx are due to release their Q3 results. Well, the company's share price dropped to a 2-year low in September following an unexpected profit warning. Since then, the FedEx share price has been slowly grinding higher, and stock price is now up by over 40% from the September low. FedEx beat Q2 profit forecasts with earnings per share at $3.18 a share, but revenue missed forecasts at $22.8 billion. Profits came in higher thanks to cost-cutting and price rises. And FedEx said that it continues to plan for another $1 billion in cost savings on top of the $2.7 billion previously announced. Full-year earnings guidance was announced between $13 and $14 earnings per share, and a strong rise in US retail sales bodes well for their Q3 results, which are expected to show earnings per share of $2.74. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from NatWest Group, Segro, Anglo American, Haleon, CRH and M&G. And in the FTSE 250, we'll hear from Crest Nicholson Holdings, Dunelm, Bellevue Healthcare, JP Morgan Emerging Markets Investment Trust, Spirent Communications, Balance Commercial Property Trust, and Digital 9 Infrastructure. So there you have it. It's another week of inflation watching across the board. And perhaps more importantly, here in the UK, all eyes and ears will be on the Chancellor as a spring budget is delivered midweek. With elections likely due next year, no doubt generosity will be in short supply this time around, as the government will of course be saving up the war chest for the habitual pre-election giveaways next year. But with Sunak and Hammond's own backbenchers applying pressure to make this country just a little bit more attractive to do business in, it'll be an interesting budget to keep the dogs at bay whilst also trying to balance those books. So anyway, that's it from us from the start of the week. But as always, our regular reminder about our app, delivering you our award-winning trading signals, which of course are free to receive and to use. In the meantime, thanks so much for watching as always, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and our opinions. So, as always, until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.